G'day, Jade Eagles here, and today I'm going to be making a spicy Thai relish with some fresh veggies and some rice crackers. Perfect for a get-together, whether it be Super Bowl, any get-together with the family, it's going to be a hit. With that, let's get started. All right, so let's get the coconut cream in there for a start. So I often get asked about, how to save taxes or how to reduce taxes in retirement. As we're making this dish, let's kind of talk about some tips that you can take into that maybe help give you benefit in reducing taxes for your retirement. So we're going to get the chicken in there. Break that up. Push that out. Probably doesn't look the best, but it's going to taste delicious. What we want to do is cook that chicken through before adding the rest of the ingredients in. So one of the biggest things that you can do to improve your income in retirement is really look at optimizing your taxes. So there are a number of ways that you can certainly do that. I'm just going to kind of touch on two that I find are important. So with that, the first way to optimize your retirement is really maximizing your Social Security. So what do I mean by that? Well, when we think about Social Security, one thing to take into account is for every year that you wait, your Social Security benefit goes up by 8%. That's a pretty impressive number there. If you take it early, it also drops as well there. So one of the best ways that you can certainly increase your retirement income is by delaying. We're going to get into it a little bit further. It doesn't necessarily mean that everyone should always wait until age 70 to take it. There's some other things that need to be taken into account. While that's cooking there, I'm going to start making some of the veggies there. So I've got some endive, I've got some Lebanese cucumbers, and I've also got some crispy rice. One already comes already cooked. You can make your own, I've done it, but for this, we're just going to use the bought stuff. So the veggies are going to be ways of like dipping into the dish, okay? So they're kind of like your utensils for it. So it's kind of hands or utensils free other than these veggies. If you haven't used endive, they're really great. They're kind of like a little boat. Give that a bit more of a stir. With the cucumbers, I'm just gonna like slice them into these little let it stir. By not only delaying taking that Social Security, I've already mentioned about how we get that increase each year, we're also increasing our after-tax income. What do I mean? Well, if you weren't aware, Social Security, not the full benefit is even taxed. In fact, it's only ever taxed up to 85% of the benefit. If you've done some creative planning, or if you're maybe a lower income earner, you actually might have 0% of your Social Security taxed on the federal level. Now, on the state level, there are actually some states that don't even tax Social Security. So make sure that you check your own specific state rules. We're here in California. We certainly pay enough state income tax, but the benefit about our Social Security benefit, it's actually not taxed on a state level. Chicken's cooked all the way through now, so we're going to add all our other ingredients to it. So we've got some chili jam here. You can make it yourself. Otherwise, just buy a bit of this and it works just as good, okay? I got some fermented shrimp paste, a little sugar. So with Thai cooking, you're looking for that sweet, salty, and a bit of heat there as well. We've got some chili powder. We've got tamarind paste. You can buy that in a block form, then rehydrate it. Some oyster sauce. Some pungent fish sauce. And we're just going to start stirring that through. Look at that. Oh yeah. You don't want to be wearing a white shirt around this. So when you actually do start looking at how much of your Social Security will be taxed, the government looks at this thing called a provisional income. And what provisional income means, it's not looking at your entire income, it's a little bit more muddier than that. So they actually look at only half of your Social Security benefit. So if we look at marriage filing jointly, we look at that total amount, but then we only take half of it plus any additional income. The good thing to note that if you've done some strategic planning, Roth distributions do not go into that provisional income. Definitely hit up your advisor, do some planning with your CPA. Maybe it does make sense to do some sort of strategic planning as you lead up to retirement or prior to retirement, doing some Roth conversions. That way it's reducing your provisional income when you have to start taking Social Security. For example, if you're married filing jointly and your provisional income is under $32,000, 0 of your Social Security is taxed at a federal level. And if you're like me here in California, 0 of it will also be taxed at the state level. It goes anywhere from 0 all the way up to 85% of your benefit being taxed at the federal level. So why am I talking about taxes? If we think about it, if only 85% of our Social Security benefit is going to be taxed, think about it if you're going to take an IRA withdrawal where 100% of that money is going to be taxed. Straight out of the gate there, you're already saving that 15% there and putting it back in your pocket there. So if you needed to pull out $100,000, you've got to think about where your tax rate is if you're taking it from an IRA, whereas if you're just going to take it from Social Security, I understand. You've got no way to, certainly control how much you get from Social Security other than working longer and earning more, but only 85% of it is ever taxed at the highest level. So you're getting a benefit there versus an IRA withdrawal, okay? So as that cooks, we're gonna chop up out some shrimp. I've got some tiger shrimp here. I wanna chop them up really fine. So each bite you're getting a little bit of shrimp, you're getting a little bit of that chili paste, and also some of that chicken. Add that shrimp in. Gonna add some chicken stock. Give that a stir again. Smells delicious. The second big way to reducing taxes in retirement is asset location. Is that asset allocation? No, it's something totally different, okay? Asset location looks at how each account is taxed, because not all accounts are taxed at the same rate in the same way. For example, let's look at an IRA, or a 401k, a retirement account. Let's just give it that blanket canvas of that. Those funds have never been taxed. However, when you do withdraw them, they're going to be taxed at ordinary income rate. Depending on your ordinary income rate, it could be anywhere from 0 to 37% at the federal level, okay? The next account to look at is probably a taxable account. The benefit of a taxable account is that it's going to be taxed at capital gains rates, which are a lot more favorable. They range anywhere from 0 all the way up to 20%. So once again, a lot more favorable if you're a higher income earner. You're saving 17% straight out of the gate there, okay? Another account to look at is a Roth IRA. Now, you've already paid the taxes. It's kind of works the reverse of an IRA or a 401k. So it's after tax money that grows tax deferred for you, and then you get to pull out tax free. By coming up with the right strategy there, you can actually heavily reduce the amount of taxes that you're paying on that retirement income, where part of your income can actually be coming from those Roth distributions, which are going to be tax free, pulling some money from the taxable account, which are at capital gains rates, which are lower than ordinary income, as well as obviously some money coming out from Social Security as well, and your 401k distributions, which are going to be taxed as ordinary income. Dividends and interest are actually taxed anywhere between 10 and 37% at ordinary income tax rates, okay? Gains, that's the growth of the portfolio, have, are taxed more favorably technically, and they range anywhere from 0 up to 20%. So as that's cooking down, I want to smash up some peanuts. So I've already roasted these. What we want to do though is crush them there so the smaller fibers can kind of start binding that sauce together. We want to kind of have it quite a thick sort of consistency, thicker than a chili. So I'm going to crush these now. Stir. So those shrimp have cooked through now. We just need to add the peanuts and the dish is done. It's that simple. So when I'm talking about capital gains here, I'm specifically talking about long-term capital gains. Short-term capital gains, that's any investment held for less than 12 months, is actually taxed at ordinary income. So I'm talking about long-term, which is held for greater than 12 months. So long-term capital gains can be taxed more efficiently, but it's going to depend on your household's income. And for that, I'd really recommend you to talk to your tax professional or your CPA who can better advise and guide you on this area. So why am I telling you all this sort of stuff? Well, I think in short, you don't have to have the same allocation in your taxable account as in your retirement accounts. You should be looking at the tax treatment for those underlying investments and making sure that you allocate them into the right account before making those decisions. Right, let's add the peanuts in there. Combine that through. Look at that. Ooh, yeah. Taste for temp. So we want to be having, salty, sweet. Coming along great. And that's it. That should be about done now. Let's take it off the heat. Let's finish up making our vegetables, get the rice crackers out there, get this thing plated up. So here's the finished product. We've got our spicy Thai relish with fresh veggies, while also talking about reducing taxes in retirement. Enjoy. I hope you've enjoyed this video. Be sure to subscribe so you can keep up with my latest cooking videos when they get released. If you have any financial planning questions, feel free to reach out to me at thewealthgardenfs.com, where you can reach out to me directly and we can schedule a call to learn about your specific situation. I'm Jade Eagles, and I'll see you again soon.